let me explain about our project introduction, where we selected 5 companies from different sectors, namely industrial products, plantations, and construction sectors. Besides that, we also studied the company's disclosure in MFRS 108, MFRS 110, MFRS 116, and MFRS 136. Moreover, we also analyzed the company's financial performances via financial ratios calculations and some supportive articles. Finally, we identified the key audit matters, accounting policies, differences in impairments before and after pandemic. Next, let me explain about the background of 5 companies that we selected from the 3 sectors just now. Firstly, we have Golden Ferris Berhad from the industrial product sector, where it focuses on timber logging, saw milling, molding, and investment holding. Secondly, we have Aether Resources Berhad from industrial product sectors, where it focuses on E&E components and equipment, elevator and bus duct systems. Thirdly, we have Global Tech Formation Berhad from the industrial products sector as well, where it is involved in integrated manufacturing service IMS provider. Fourthly, we have Astral Asia Berhad from the plantation sector, where it is involved in the purpose of cultivation of oil palm. And fifthly, we have DKLS Industries Berhad from the construction sector, where it produces and distributes concrete products, real property, and quarry masters.
My name is Astika John. To Act 1002, move on to literature review. According to Devi Warasniasi, Masdiantini, and Musmini 2020, the company's financial performance is a form of corporate achievement in the financial aspect, which include the changes in the statement of financial position, profit or loss, or cash flow. However, the financial performance can be measured through financial ratio analysis. Based on several research, show that the pandemic COVID-19 conditions give the significant difference for a company in some aspect of current ratio, quick ratio, and cash ratio by financial ratio analysis. However, the other ratio didn't give the significant difference before and during COVID-19, which according to Daryanto,
Okay, for the first company is Astral Asia Berhad. For the Astral Asia Berhad, that has incurred the standard adopted, which are MFRS 9, MFRS 15, 16, 3, MFRS 116, MFRS 136. There is no information disclosed about the event after reporting period in 2018. However, there is a non-adjusting event in 2019 and 2020, and the company had disclosed the information in the annual report. The company has adopted the cost method and straight line method in the third consecutive years, and in computing the depreciation, there is no impairment discussed in the annual report. And however, in 2019, there is an impairment incurred, which is 142,226 ringgit. Second company is a DKLS Industry Berhad. As we can see in the slide, the company has adopted the new standard, which are the MFRS 9, 15, MFRS 16, MFRS 3, and MFRS 139 and 7 in that particular year. In the 2018, the company has changes of accounting estimate regarding to the depreciation of the PPE using the retrospective method. There is also the same changes of accounting estimate in the 2019 and the errors in the company. For the MFRS 110, which discussed regarding to the event after the reporting period, for the annual report 2018, the company has disclosed information regarding to the non-adjusting event of the conversion of the non-cumulative redeemable preference shares to the new ordinary shares. 2019 also discussed regarding to the non-adjusting event regarding to the changes of the COVID-19 towards the performance of the company. And for the 2020, there is a adjusting event and non-adjusting event disclosed in the annual report. The company had using the PPE measured at cost and use straight line method continuously for the 2018 until 2020. For the MFRS 136, there is impairment losses that was incurred during that respective year. However, there is no reversal on impairment losses that was incurred in the 2018, 19, and 20. Third company is Aether Resources Berhad. Aether Resources Berhad has adopted the new standard as shown in the slide, which are the MFRS 15, 9, 16, and there is also amendment regarding to the COVID-19 related rank occasion in the 2020. For the MFRS 110, the company had no disclosure regarding to the event after the reporting period except for the 2020, which are not adjusting event. For the MFRS 116, the company had using the method of cost and the depreciation on the cost less residual value that was adopted continuously for the respective year. The third company is a Golga Tech Formation Berhad. The company has also adopted the new standard as you can see in the slide, which are the MFRS 15, MFRS 9, MFRS 16, MFRS, and also the standard amendment which was being adopted in the 2020. For the MFRS 110 regarding to the event after the reporting period, there is adjusting event in the 2018. However, in the 2019 and 20, there is a non-adjusting event that will be disclosed in the annual report. For the MFRS 116, the company had using the PPE at cost and was continuously using adopting that measurement for the respective year. And for the MFRS 136, there is an impairment loss in the 2018 and 19. However, there is no impairment loss incurred in 2020. The last company is the Golden Forest Berhad. The company has adopted the new standard in the MFRS 108, which comprised the MFRS 9, that using the method of retrospective, MFRS 15, MFRS 140, MFRS 2, and MFRS 16 in the year 2019. There also an error that was happened in the 2019 regarding to the equity accounting for investment section that was happened in the prior year. However, there is no standard that was disclosed in the annual report 2020. For the MFRS 110 that discussed regarding to the information of event after reporting period, the company had disclosed the non-adjusting event, and they had disclosed all the information in the respective year. The company has adopted continuously the PPE record at the cost, and the freehold land with indefinite useful life is not applicable for the depreciation until it is ready to be used, and the depreciation also is to be incurred on the straight line method. For the MFRS 136, there is no impairment was incurred during the year 2018 and 2019. However, there is impairment losses incurred amounted to 248,000 in the year 2020, and we can clearly see that it is significantly increased from the previous year.
My name is Ulfah Diana binti Muhammad Siddiq, and my metric number is 280444. So today I want to continue this presentation with financial statement analysis. So this table shows the financial performance matrices by Golden Paros Berhad for 2018, 2019 and 2020. The profitability ratio for return on asset, return on equity and net profit margin shown the negative percentage for all the 3 years. Negative percentage on the ratio effect of losses on net income on this company. The impact of COVID-19 on 2020, Golden Paros has substantially reduced the losses on net income compared to losses on 2019, which is this company having a positive impact even during the economic fallout. Proceed to the next company. So the table shows the financial performance matrices by Ita Resources Berhad for 2018, 2019 and 2020. Ita Resources Berhad was impacted by the pandemic COVID-19. Impact of this pandemic, net income for this company was decreased by 60.3% from 2019 to 2020. The impact was shown by the analysis profitability ratio from this company in 2020. As we can see, all the ratio on 2020 exhibit low ratio rather than 2019. Proceed to the next one. Financial performance matrices by Global Tech Formation Berhad for 2018, 2019 and 2020. The profitability ratio for return on asset, return on equity and net profit margin showing the negative ratio result for the 3 years. It was because of losses on net income. During the pandemic COVID-19 on 2020, this company executed various measures to reduce costs, like improve cash flows, efficiency in operation and prudent control of capital expenditure in order to minimize the negative impact of COVID-19. With this preventive step, this firm was able to reduce losses and generate a better net profit rather than before the pandemic. So that's all from me. Thank you.
Assalamualaikum, my name is Nuratika binti Abu Wanawabi with metric number 280450. I will continue with financial statement analysis for Astra Asia. From the table, we can see the Astra Asia has a negative value of ROA, ROE and net profit margin. Thus, Astra Asia is not efficient towards managing their balance sheets to generate profit. But Astra Asia has a better gross profit margin as it increased on 2020. In short, Astra Asia need to give concern on their net income to get a positive profitability ratio. Next, DKLS shows all the ratios giving out a positive value. Thus, this company is efficiently generated profit from its assets. Besides, it has the highest ratio of gross profit margin among the other companies. For every ringgit of revenue generated, 62.86% of on 2020 is retained. The remaining will attributed to the COGS. To conclude, DKLS Industry Berhad is the company that has outstanding profitability ratio compared to other companies. Regression analysis is to examine the relationship between ROA as dependent variable and PPE percent of total asset as independent variable. Table 1 shows multiple R indicates strong relationship between variables as it approaches 1. The R square show only 4% of dependent variable are explained by the independent variable. Next, the smaller the standard error, the more certain the regression equation. In table 2, DF is 1 since we only consider PPE percent of total assets. The residual value the residual DF is the PPE percent of total assets coefficient and the constant are estimated. Next, regression SS means the regression model explains about 4.2% of all the variability in the datasets. Significance F indicates significant relationship exists between both variables. In table 3, the p-value is greater than 0.05, so there is a significant linear relationship between both variables. That's all from me. Thank you.
Next, I will continue the key audit method for each company that was selected. First of all, the key audit method focuses by Golden Paris Berhad is the revenue recognition and impairment of investment in subsidiaries. Next, for ITA Resources Berhad is also the revenue recognition on construction contract, recoverability of trade receivables, and valuation on inventories. Furthermore, for Global Tech Formation Berhad is revenue recognition, impairment of investment in subsidiaries, impairment of exploration and evaluation expenditure, and also the valuation of intangible asset. Moreover, for Israel Asia Berhad is focused the key audit method of impairment of property, plant and equipment and right of use asset and the fair value on biological asset. Last but not least, for DKLS Berhad focused on the revenue and cost of construction, recognition, valuation of investment properties, and also the impairment on the cost of investment in a subsidiary.
And here I am back with our project conclusion. For disclosure of MFRS 108, changes in accounting policies, estimates, errors, we could conclude that mostly it involves MFRS 9 financial instruments, MFRS 15 revenue from contracts with customers, MFRS 16 leases, MFRS 16 amendments related to COVID-19 rent, and MFRS 140 investment property. Well, for disclosure of MFRS 110 events after reporting period, we could conclude that most events after financial year of COVID-19 of the respective companies affected their financial statements, such as where prediction was unable, overall experiencing down performances. For disclosure of MFRS 116 PPE and MFRS 136 impairment, we notice most companies measured PPE at cost less accumulated depreciation and accumulated impairment loss, and it is recognized when only probable and future economic benefits measured reliably. For disclosure of key audit matters, most companies had key audit matters related to revenue recognition and impairment of investment in subsidiaries, which also includes recoverability of trade receivable, valuation of inventories, and fair value of biological assets. Thank you.